You can set your clock. It is 15 minutes to the top of the hour. That means time for your grain update that we continue through this Wednesday. Our friends from AgriLiquid joining us as always every day. St. John's, Michigan is their headquarters. They'd love to have you up there. Let's go to Chicago and check in with another good friend. We have a lot of good friends up in St. John's, Michigan with Troy Bancroft and the family up there. But so is Todd Horwitz, BubbaTrading.com. Good friend here, Todd. Great to have you here on a regular basis. Grain trade performing pretty well after some negative numbers on paper yesterday.
You know, Mark, I think that's kind of, you and I talked about that yesterday. Mm-hmm. The numbers, the support levels seem to be in, and we look for higher prices. We want to be, and especially in corn and wheat, we want to be a buyer on every dip back down. You know, soybeans still a little bit tenuous, but still at 940 is a key number. Notice how we've been on both sides of that. And of course, they've tried to break it. They've tried to have negative news. But I think overall, we're going to start to see much more positive news going forward. So I'm pretty excited. I would, in fact, be very comfortable with saying the lows are probably in.
Really? And now you're talking lows in for corn and all three?
Across the board, maybe. You know, my biggest concern would be soybeans right now, and that's only because they're the weakest at the moment. But they have done a remarkable job of holding up in spite of everybody trying to say that they're going down to $7 or $6. Yeah. So I think they've done a heck of a job holding in here and building some nice support. So I think we're going to see higher prices coming soon.
Can you tell if we have that new money coming in? You've referred to that several times, coming out of whatever it might be, stocks, bonds, and moving into commodities. Is there some correlation to beans being 8 cents higher and new money?
I don't think so yet. I think really the rally is probably a little bit of short covering. You know, people, didn't break as hard as they wanted to yesterday after the news. Mm-hmm. But I do think new money is going to be coming in. I think you're seeing in the stock markets a volatility expansion, which means that they're getting ready to sell. And when they sell, they're going to need a place to go with that money. And I do believe that it's coming into the grain space. So that would make for a great model, especially if we get some more positive data, which I think we're going to get that as well. I think overall, I think the dollar is going to weaken, which is going to be good. I think we're going to have better working conditions to the government. I think everything's going to work out to a better advantage to our farmers and producers to bring in higher prices.
All right, and so we are 7, 8 cents higher in soybeans. We check that corn again real quick here, and starting out a penny or two higher, and exactly where we are now, 1 to 2 higher. And the wheat trade starting out on the quieter side, but and still unchanged in Chicago. Wheat, what do you still see a lot of potential for wheat to move higher? You said as well.
I think wheat's going to over $5. That's, again, I've been on this bandwagon. I hope it doesn't collapse. I think that wheat's going higher. I think, again, we're going to get, I think, a lot bigger export this year. I think that there's going to be a lot of good reasons to believe wheat's going to go higher, and it has been the strongest since the lows were put in last year. So I think that will continue to be that way, and I'm looking for a very solid year across the board, but especially in wheat. All
right, I'm going to give the numbers here. We'll take a break, give you a little chance to catch your breath, and talk about livestock here, and a little bit of strategies here, the difference between speculation and hedging here in livestock. Todd Horwitz back with us in a minute. Here are the numbers here, those of you tuning in on Rural Radio. Corn for May up 2.5 cents, $3.69. That's a ½ cent from the high of the day. December 2 cents higher, $3.92.5, and that is just 1 click from the high of the day. Soybeans, we mentioned 7, 8 cents higher. In fact, May nearly 9 cents higher at $9.48. November up 7.5. November new crop beans $9.56, 1 penny from the high of the day. Wheat more unchanged here in Chicago. May up a penny. July up 1/4 of a cent. Kansas City, the new crop July up 3/4, and Minneapolis July wheat there is 3.5 higher, $5.39. Take a break, and we'll check back in with Todd Horwitz, talking livestock, talking speculators versus hedgers also as well. Coming up. 10 minutes to the top of the hour means time for your livestock update. We go back to Chicago. Todd Horwitz. Todd has mentioned you wanted to take just a little bit of time here, a few seconds, talking about speculation and speculative trading versus hedging and that side of the trade. Talk about that.
You know, really what happens, Mark, is we're seeing this right now in the cattle markets. They are basically exploding to the upside. Now, there's really no fundamental reason why they should be that higher. So speculators are really under the gun right here because most of them are short. And that's what you have to remember. If you're a speculator, you have to have an exit point to get out and say the trade's over and forget about it. If you're hedging, then this is why we'd like to talk about hedging. If you're hedging, we know that big markets don't announce themselves, and maybe this is the start of one. I don't think so, but maybe it is. So if you're hedged properly, you're protected to the downside while the upside's wide open. You can let the markets run and hope they keep running higher because you don't have that position on that locks in how much you can make. And that's the difference is if you're speculating, you got to be able to cut your losses. If you're hedging, you want to let the runs and the wins run as long as they can.
Exactly right. And hedging, if you're a producer out there, is this a place you want to look ahead and do some hedging for second and third quarter?
Oh, I would 100%. You know, we've still got some problems in these markets, Mark. I mean, you know, this backwardation that we're seeing out in the forward, again, there's a little bit of a squeeze, and we're still getting that April-June squeeze in the fat cattle. And again, I would look for some selling, but again, it's a little bit challenging here if you're trying to short it because I just keep going straight up every day. And
then looking at the lean hog, I'll get the numbers here right now, but we are higher cattle and feeder cattle, no doubt. But hogs are lower by over $1. In fact, May down $1.70, June down $1.22. Speculating versus hedging in the hog complex.
You know, I guess that this is the, you know, we were looking for right around here. And, of course, we got this final blow because I thought yesterday might have been the overall bottoms there at the 71 level. And, of course, we took a little bit more pressure. But I think that this would be an area to start stepping in and buying here. I think this is a pretty good buy area. I think we'll see higher prices. And I know that you're going to cut me off. So happy Easter and a blessed Good Friday, everybody. It's great to be on RFD TV.
Well, thank you as well, Todd. Go right back at you here and have a happy Easter. And say hi to Mom. I know you're going to see Mom here over the holidays. So give her our best. Thank you. Todd Horwitz, Bubba Trading, BubbaTrading.com. Wants to be helpful to producers buying or selling in these commodities to make a marketing plan and put one together. All right, here are the numbers as promised here. Live cattle futures higher. April up $1.37, 124.62. High today, 124.65, so just 3 points from the high of the day. June up $1.18. Kind of defying the odds maybe a little bit here, according to Todd Horwitz. June cattle up $1.18, 114.88. Feeder cattle even higher to start the day and now advancing over $2. April is one of those, $2.12 higher, 139.30. We'll have by the way, tomorrow morning, hope you can join me in the 8 o'clock hour Central Time. And Ed Serwin will be with us from Amarillo, Texas with USDA. You'll have a comprehensive look at the cash feeder cattle trade. He's watching these markets around the country, auction markets, about 5 or 6 states. And they'll be watching, and they are watching, these futures moving higher. May feeders are $2 higher at 139.35. Now, we mentioned with Todd Horwitz, he thought maybe the lows might be in yesterday in lean hogs, but they are working lower today. May down $1.70, 67.88. June down $1.15, 72.85. So getting, man, they were close to 72 at their low.
We'll keep watching. Thank you, Markets Editor Mark Oppold.